Mr. Terence.
Hey, Mr. Meg, how is it?
Good, man.
How are you doing?
Very, very well.
Nice one.
How is Zim?
Zim is okay, man. Zim is okay.
How is family?
Our family is blessed. Blessed.
Wonderful. How is trading?
Very lekker. Going well, it's okay, man.
It's always lekker. Always lekker. Okay. Hey, that's nice. My Joe, how are you?
I'm okay. How are you, Michael?
I'm very well. Right. So, I'm very sorry for waking you up so early. So I just wanted us to just look at a few things here and there. Then if you have anything to ask, you ask, then we'll just close it from there. So if you remember, was it 3 or 2 days back, we did an analysis on VIX 75. The reason why you see I haven't been giving a signal is because we talked about the VIX, like we talked about the sell coming to this zone, then we start buying from that zone. Because right now we're currently trading a downward channel on the volatility 75. If you look, this is the daily time frame, and we are currently in a downward channel, as you can see. So in a downward channel, whenever you're trading channels, you need to make sure that you are buying the bottoms and selling the tops. So right now, the market is going to the bottom, which is our buying zone. So from there, the first possible scenario, most probable possible scenario, is for this market to push up. Why? Because we are still within this downtrending channel, unless because the only way it's going to break is either to break above and start to form an upward channel. Because if it breaks here, simply continuing with the downtrend, so that there's no really it doesn't make sense for it to actually break below here and actually continue downtrending. Why not just downtrend in this same channel? Because channels they actually guide the market to actually flow in a trending way. So they're also good for the market as well. So VIX, we are bearish. VIX, we are bearish. If ever you see any buys happening, know that they are most probably just retracements to certain zones before we reach our final target for the sales, which is the bottom of this channel. From the bottom of this channel, I spoke about it. Once we get our confirmations, 15-minute, 30-minute, once we get our confirmations, whether it's a double bottom, double top, whether it's a bullish engulfing, whether it's a hammer, once we get our confirmations that we enter, then we hold all the way to the top of the channel. Or if ever not the top of the channel, you look at the recent lower high. Because remember, this market has been downtrending. So a downtrending market is like this. You look at the recent lower high, which is this level here, which is this area here, right? Right. So when you target the recent lower high, what are you saying? You are saying, just in case this downtrend proceeds, I would have secured something. So in case it wants to proceed, it will come and test this lower high and fail to break above the lower high. If ever the downtrend is still going to continue further, it will come on the lower high and fail to break a lower high. When you see a lower high being broken in a downtrend, know that the trend has now changed. When you see a lower high being broken, know that the trend is now changed and we're no longer in a downtrend. So how do we now say we're no longer in a downtrend? When you see this lower high being broken, that is why it has to be your first target for the buys. First target. Once you see that level being broken, know that we are now no longer in a downtrend, and that's when maybe buys can continue from there. So this zone, you realize that the market can actually come to this zone, bounce, come back down. Coming back down here, it will form a higher low, a low that is higher than this one. If it doesn't form a higher low, it's going to form a double bottom before coming back up like this. Higher low, either a higher low, which will actually be something like a right shoulder. If you look at it from a perspective of head and shoulders, that can possibly happen. Head and shoulders, or for example, right now we already have a left shoulder. We already have a left shoulder. The head would be this zone here where the market is going. So it would be something like this, left shoulder, head, then something like this. So that's another possible scenario. Either you're going to get that head and shoulder. Obviously, this right shoulder, it's still a higher low because it's higher than this low. So already this is a confirmation to say most probably the trend is no longer bearish. When you see the market now forming higher lows, then here it comes and break, then form a higher high. That's a confirmed bullish market. First sign is the higher low. Second sign is the higher high. Those are the two confirmations for a bullish market: higher low and a higher high. So your entries now, first entries here, your buys. Once you buy from here, you're targeting this lower high. Once it gets to this lower high, most probably it can actually go down. Most probably it can actually go down. So first target would be there. Then when it comes back to this level, which is I'm expecting to be the right shoulder, you can actually take more buys somewhere here, or you can simply use your Fibonacci to say point A to point B at the red zone there. You can also use your Fibonacci for entry. Then around the 50% or 61.8, you see that it's also close to the zone where we're expecting it to go back to. 50%, 61.8, around there you enter your buys as well. Once you enter there, your target is still the same. We're targeting the top of the channel, which is around the 61.8, negative 61.8, around those areas. So once we get back here, 50%, 61.8, we scale in. Then once we break the 0%, which is this lower high, we scale in as well, targeting the top there. So meanwhile, the market is bearish. Meanwhile, VIX75 is bearish. It's on a bearish trend. If ever you're not in sales already, what you simply need to do is to wait for a confirmation. Then you join the trend. You don't just join anywhere. Because remember, this thing is already moving. You don't just sell anyway. If you check here, there's so many areas to sell. We gave you the sell here at the top here. Here at the top here, we gave you a sell. Sell, we gave you a sell. Once we broke here, broke the support like this, broke retest. This was a selling opportunity. Once we broke this support as well, white line there, broke retest. This was a selling opportunity. So 1, 2, 3, 4. Those were 3 or 4 major entry points for the VIX so far that I've seen. 4 major legit entry points for the VIX. So now, what you simply need to do is to wait. If ever a pullback happens, you can actually scale in based on the pullback. But if it doesn't happen, just if it pulls back here, I would be so proud, because that can give other people an opportunity for entry. This will now be like something like a double top neckline. So something like this. If it pulls back there, it would be good, because those that are left behind can actually join in sales. Do you understand? Yes. So don't rush to just jump in anyway. Wait for the market to give you confirmations. Either you're having a trend line. This is a trend line that you can also use. So if you look at this trend line, it's a downward trend line, as you can see. So what can happen? The market can maybe come here, then sell from there. So here will be your chance here to join. There, as well as the break of this support here, will also be another chance to sell. So I hope it's clear.
Yeah.
Okay. Any other instruments that you want us to look at?
I'm in cash 500 right now. So I want to see if it is a good time for me to.
Are in sales?
Yeah.
Okay. Profit or loss?
I'm not sure now, because I left it in loss and is it 92?
Okay. So crash 500, we are in an upward market. You know, whenever you're trading bullish markets like this, it's okay to sell, but you need the best entry point. For example, this is now a channel, right? Best sell either it's on a resistance, major resistance, or at the top of the channel. So right now, the market has established a level of resistance. There's a resistance that where the price is right now, it's a very, very strong resistance. That zone, it's a very, very strong zone of resistance where crash 300 is. Let me just.
Okay.
A very strong level of resistance where price can actually maybe go down from there. Let's see. So this is what we are seeing from the daily, but we are in an upward market. We're in an upward market. Let's not forget that. So we are at a level of resistance. Let's go to a lower time frame. 4 hour. You can see price responding to the resistance there. You can see price responding to the resistance there. Right. So what we now need to do, we need a very, very, very accurate entry point, because at the back of our minds, we know that we are in an upward market. We're in an upward channel. Right. So we also have this trend line. It will actually be clear maybe on a 1 hour, 30 minute That's where maybe it can be clear, but this is our level of resistance where the market is currently at. Strong level of resistance there, right? Then we also have this area here. We also have this area where the market was failing to break for a while, then it broke and retested and continued on that area. So this area is also a key area because once it crashed, because if you look at market structure, if we look at things from a market structure perspective, this market formed a higher high, higher low, higher high, right? If ever sales are going to happen, they can happen and come back to this higher low. If ever we fail to break this higher low, sales might not continue all the way. So how do we know that sales are most probably going to continue? When we break this higher low, that's when sales can only continue. But meanwhile, we have this trend line. If this trend line is not broken, this market can actually continue buying up until we get to the top of this channel again. Once it fails to break this trend line and it manages to break this resistance, the safest entries are buy positions above that resistance.
Okay.
That is only if you fail to break the current trend line where the market is. So once we buy from there, we are targeting the top of the channel. Let's look on the 1 hour. This is 1 hour. Let me just draw clearly my trend line. Right, already on 1 hour, I like what I'm seeing on 1 hour. Already we've broken this trend line, broken, retested. It's a good entry point. I think it's a good entry point. We just need to, it's a good entry point. It's a good entry point. What you simply need to do is to look forward to this higher low, because we are higher high. If we fail to break this higher low, the market can come here. What this is now is it will be a double bottom, left leg, right leg, then we go. This can actually happen. So if ever we don't break that, so that higher low now, that is your first target now. If ever you're really targeting, you're looking at targets, this higher low is your first target that you're looking at. But meanwhile, I like what it is doing. But another thing that you also need to take note of is, if you look at these 1 hour candles, you can actually see that they are failing to break a certain zone. There's this zone that they are failing to break below. That is a zone of support. If they fail to break that zone, this market will go up, because that will simply be now a higher low, because it's higher than this one. So let's look at that zone. Once that zone is broken, it's a confirmation for you to say sales are most probably going to continue. You see now, it's a clear level of support here on 30 minutes. So now you entered, you sold on a support, which is something that is not done. You can't do that in trading. You don't sell on a support unless it's broken. You don't sell on a support unless it's broken. So your entry right now, it's a risky entry because the market hasn't broken this level. Once this level has been broken, it's a confirmation to say most probably we're now going all the way to this first target there. So yeah, this market can actually maybe come back to this zone. Why that zone? I'm looking at this structure here. Double top, neckline, broken neckline, retest the neckline, then we go. Can you see? Yeah. So The best entry that you were supposed to enter was after the break of the support or on the retest of the neckline. Those were the two best selling points. Right now, it's not a good selling opportunity. You can as well consider to come out now of your position, wait either for the retest of the neckline, then we reject there, or the break of the support. Yes. So Fibonacci, point A, point B. If you check the neckline retest dates around the 50% Fibonacci, which is a good point for us, which is a good zone for us, which is a good zone for us. So around those levels, that's where we're expecting the market to give us a rejection. Once we get the rejection, we enter our sell positions there on that level there. Yes. So in an hour or two from now, it would have reached this level. Then once you get the rejection, whether it's your bearish engulfing, or your shooting star or your hanging man, once you get that here, once you get that confirmation, you simply enter your sell positions. Your stop loss just above the zone, just above the zone. Let me show you. Just above the zone, like this, either around on top of these candles like that. Then break of the support, it's also going to be the break of the 0%, which is where you can also scale in more cells. Then your first target is this higher low based on a higher time frame perspective. So that is a good one. That is a good one. Wait either for the retest here. First entries enter there. Next entries after the break of the support, which happens to be the 0%. I hope it's clear.
Yeah, it's clear.
So here, even if it doesn't come all the way to the neckline, but it breaks here. If this next candle breaks this support, all you need is a slight retest to this support, then we go. Once this candle closes like this, you only need a slight retest, then we go. Sometimes you can even enter on the after the breakout. You know, breakout candles, we explained how they look. They usually, the body, the higher percentage of the body is usually below the support. That is a strong breakout. So after the breakout, just wait for price to come a little bit close to the support. Then you get your entry there upon the rejection. Then yeah, we go. So best entry either on the 50%, next entry break of the 0%. That is it for Crash 500. Anything else?
Nothing, but I just want to know what to end levels being 5.
How what?
Am I going to, like, what time am I going to enter, like, B5?
B5.
It's,
B5, you're not in. Because this
I'm
thing.
not in.
Okay. B5, B5, B5. Let's look at market structure. Market structure, what are we getting from market structure? I can also draw some major channels so that you see we are in a major downward channel. We're in a major downward channel. So whenever you're trading channels, the bottoms you buy, the tops you sell. Bottoms you buy, the tops you sell. That is how you trade channels. something like this. Right, so we are saying B5, we've been forming higher highs and higher lows. Push. Higher high, higher low. Higher high, higher low. Now it can actually push further up until it gets here. Then we get our higher low somewhere around this area here. So B5, the market, the current market is it's a bullish market inside a bearish trend.
Right.
A bullish market inside a bearish trend. So this can it's actually a counter trend because it's counter trending the major trend, which is downside. Right. So here we are. Your entry, you're supposed to enter around this area here. You're supposed to have entered, which is something like 5 days back or so. So far I'm looking at this double bottom. Double bottoms always have a neckline. Broken, came back, broken. I'm expecting something like this. Something like this. A pullback before we continue. So where can the pullback happen? We have this level of resistance where price is currently at. This can give us the pullback that we are wanting. Once you get the pullback, it's an opportunity for you to enter your buy positions. So B5, that is what I'm looking at. We are at that level of resistance now. Resistance. So the market can maybe drop from that level. Maybe it can drop from that level. You can also draw a trend line. If you want, you can also draw this trend line. This trend line was also maybe going to guide you for some of the entries. If you check this trend line, how many times it was touched here? So many times. Check. 1, 2, 3, 4, 5 times this trend line was touched. This was an opportunity for entry. So either it's going to retrace from where it is, or it's going to come all the way to this resistance. If it breaks this resistance, you simply buy as well, because you're targeting the top of the channel as a target. So now I'm simply expecting a pullback. And I told you why I'm expecting a pullback, because of the neckline that I saw on the daily. So B5, I hope it's also clear. I hope it's also clear, B5. Or you can also use your Fibonacci. Point A, point B there. If you check the pullback, it's around the 61.8. Around 61.8 zone here. Yes, so that is what we're looking at on B5. That is what I'm looking at on B5 and C5 as well. So I hope it's clear, this one. This one is where we are waiting, but this one is a lot of time of waiting, because this is 4-hour time frame. This can actually take the whole of today. just to come down here. So this one, it will demand you to wait longer. Unlike crash 500, which in few hours from now, it can present you with that buying opportunity that you're waiting for. With that selling opportunity, I mean. So C5, it will be the first one that you're going to enter, because now I think it's going to take an hour or one and a half hours or 2 hours just to get this zone. Once we get this zone and get our rejection, we enter. Once we break the support, we enter. So C5 is the one that you're going to most probably get a good entry from. Then VIX, we spoke about VIX. You're simply waiting for the market to pull back to the trend line. Once it pulls back to the trend line, you can as well consider taking positions from the trend line. I think already the trend is moving. You always need to wait for pullbacks, then you enter on the pullbacks. So that is it, B5, C5, and the VIX. Any more questions?
No.
Okay. So wonderful.
Let me just continue. All right.
How much is your equity now?
It's 110. Equity.
Okay. I know it's fine. Just wait for the zones that are significant. Then you enter on the significant zones. You know the advantage of entering on significant zones. Rarely are you going to find unnecessary losses. Rarely are you going to have unnecessary losses when you enter on significant zones. So C3, C5, we're waiting for the market to come to the significant zone, which is the neckline of the double top that we saw. This also happens to be around the 50% and 61.8 Fibonacci, which is somewhere where we are anticipating our entry. That is a significant zone. That's a better zone for you to attempt to sell.
All right.
So that zone, it's a better zone to sell.
Right.
And also after the break of the support, it's a better zone to sell as well. So just wait. Once we get there, once we get the rejection, either it's a bearish engulfing, a hammer, a shooting star, you enter your stop loss just above the zone like that.
All right.
Yes. So this one, don't miss it. Don't miss it. I want to see. I want to hear from you the update of this one.